Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that I posted on here pretty much describes what's happened overnight. Starting Sunday night, we rallied $1,000, actually $2,000 from the low on Friday. Then we broke $2,000, actually $3,000. We went from 172.06 down to 169.12, back up from 69 up to 171 and a half, almost 172. So it was actually closer to a $7,000 move overnight in bonds. Folks, the people out there are scared, and they should be, because we are in a very, very bearish scenario. Let's take a quick look at one other thing that I wanted to mention to you. We've had a big move in gold overnight. If you remember, the level we were looking at yesterday, on Friday, was around that 1580, 15, whatever that number was down there. But folks, those of you that take the 24/7 newsletter, pay really close attention to it, folks, because something really, really big happened Friday. Those of you, if you remember, the Dow Jones and the S&P and the NASDAQ and the Russell all rallied a lot, 1,000 points in the Dow Jones. It was down 500, ended up being up. The S&P rallied 100 handles, and it closed up. The important thing about this, folks, is that when you check the open interest of what happened on Friday, there was a massive increase in open interest in the S&P contract, 200,000 contracts, and it's only got an open interest of 2.8 or something. So this was huge, 7.5 or 8%. We've got a caller on the line, Brent from California. Brent, how are you doing, buddy?
I'm doing great. Larry, how about yourself?
I'm staying on the green side of the grass, buddy. What's up?
That's a positive.
You got it.
I was calling about gold. I had some numbers that I had kind of run through my head. I was hoping to kind of go through those and get your thoughts on it.
Sure, please do.
So my starting number was 1633, which is a number that Steve Rhodes had cited. When it was above that as potential support, of course, it went kind of crashing through that and got down to that 1564. And so then what I did is I took your harmonic number of 34, multiplied that by 268, you add that to that 1564, it gets you right there at that number, 1632. And so I'm thinking if we get up there, I already made some good money last week on shorting it. And so I'm looking at that potentially as a spot if it happens to get up there and stalls as another short.
Okay. Yeah, I could certainly see that. The thing that I think that everyone should pay attention to is that on Friday, given the fact that the end of the world was, right around the corner, we made an exact 61.8% retracement on the weekly chart of silver at 1640. I mean, just right on the money. And then it's just rallied, better than 60 cents so far, and came back a little bit. But platinum also made a perfect 78.6% retracement. So something big happened Friday. That's all I know. And if you look at, I know you look at the letter, but you'll see all the fib numbers that are out there. Brent, I've never seen so many fib numbers on a long-term scale like what we saw on Friday. I mean, that's really big. That's all I can say. So pay attention, because if we start breaking down from here, we're looking at something pretty sinister. Not the end of the world, but a pretty big correction.
It's been interesting. If you like volatility, we have that.
That's just the beginning. That's for sure. Everything okay up there in Martinez, California?
It is. It's been kind of a weird winter. We started out great, good amount of rain in December, and then it just kind of shut off on. I think we had one decent storm in January, nothing in February. So I have kind of reestablished a fruit orchard on our property, and so all our trees are in full bloom, and it's just early for everything. Everything got thrown off because it's been I guess you'd just call it an early spring, or a lack of winter. one or the other.
Well, listen, thank you for calling in. If you ever get down this way, please stop in again. I'd love to see you.
All right. Take care, Larry. All the best to you and Sarah and your family, and I'll talk to you.
Thank you very much. You bet. Okay, folks, we were talking to Brent. Let's just give you an idea. I mentioned all of the Fib points that we were looking at. Let's just take a look at this one. These numbers, I don't know if you either believe in Fibonacci or in numbers or not, but when you see these things happen like they did over this past week, it's really quite amazing. This is the weekly chart of the New York Stock Exchange Index, folks. I want you to see the low in December of 2018. You see that 61% retracement that it made? Pretty much spot on. Now, look what it did Friday. Look at that. That to the exact tick. I mean, you're talking 0.00, to the third decimal place. That has to mean something. Now, the only thing that's going to keep this market to rally, I believe, is that if the bonds, don't go crazy to the upside, and they've certainly done that tonight. But the open interest in the bonds has been decreasing the last couple of days, and volume is huge. And if you'll look at it, you'll see the swings that we're having. These are not indicative of a straight up bull market. These are people that are there's a giant battle going on here, and whether we hold it or not, I don't know. But all of the major indices, every single one of them that we looked at, was exactly at those major Fibonacci numbers, folks, and that's really amazing. Now, if you want to hear something really, those of you that really like like weird stuff like the unexplained. How would you like to know that if you read the book of Luke in the Bible, okay, and if you took the numbers out of the book of Luke and just looked at those, do you know that they describe the exact circumference of the earth? They also tell you what the speed of light is and a whole bunch of other stuff. Just those sequence of numbers from the book of Luke. And Luke in the old days meant light. So I don't know whether that means anything or not, but that was brought to my attention. I'll have some more information on it. It's an area of discovery or study called geometria. So it'll be interesting to see whether some of these things up. But it's just all numbers. That's really what we're watching. But if you get the 24/7 newsletter, take a look at it, folks. There are so many numbers. We had a perfect 61% retracement on the weekly in silver, a perfect 6% retracement on platinum, a 50% retracement with a giant ABCD pattern, one of the biggest ones of $150 an ounce in gold. And I mean, they're just one after another. I mean, it's really, truly incredible. I don't want to spend the whole show here, showing them, but boy, I'll tell you, there's a whole bunch of them. Just take a look here. I'm going to show you the E-mini. You'll be able to see it here. And this is why this E-mini is so important here at this 2850. You'll see that we made it an exact to the absolute tick at 28.55. That was a 50% retracement from the low of last December. It was also 78% retracement from the low that we made back in May. So both of those were spot on. Now that's got to mean something. So, and as far as the news coming in on this stuff, believe me, folks, I really believe this. I really believe that it was, I'll tell you what I believe, whether you believe it or not. I'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to take a look here at a chart that Rich Anderson sent me. By the way, our guest this week is we're going to have Stan Harley on tomorrow, and also we're probably going to have Rich Anderson on tomorrow. On Wednesday, we're going to have Bill Chapman, Trend Reversal, and then on Thursday, we're going to have Bill Meridian, Cycles Research. He is basically short bonds, short stocks, and I believe long gold. I believe that's what he's looking at. So we'll have him on Thursday, and I hope you enjoy the show. But this is a chart that shows the major things that's happened over the last 90 years that caused a lot of trouble. You'll notice the Great Depression. That was the bottom of July of 1932. There was Hitler invading France. That was 1941. Black Monday, which was October 8, 1987. The dot-com bubble burst. These are week-on-week comparisons, folks. The financial crisis, you see we were down almost 18% that week, and we were down 13% this week. So this is a bad thing that's going on with the virus, and we hear all kinds of things looking at what's we'll see that. So Dennis said he's looking for a test of the 1585 today in the gold. You could certainly do that, Dennis, without any trouble at all, because the low was 1565 during the meltdown on Friday, but I don't know if that's going to happen or not. All I know is that if we make new lows now after those big rallies, that means these things are really going to go. It's just Cycles Research, Terry. It's cyclesresearch.com. And that'll get you there. It's in Vienna, Austria. Just Google Bill Meridian and it'll pop up because he's everywhere. He does all kinds of podcasts, so you'll be able to see it, and he'll show you the show. And then we'll have Stan Harley on tomorrow because we've had some really wild volatility, and we're going to continue. I believe that the key to this, if there is a key, lies in two things. One is the fact that the bonds are showing topping action, folks. If you get a $6,000 move like that's a giant battle going on. That's the art of war in its beautiful existence. So the question is, if we close above 172, the bulls will probably have won. But there's no new buying coming in. It's short covering. That's not a good sign. We've seen that many, many times. We saw it in gold up at the top. And by the way, we had a very powerful signal in gold. We had a big drop in open interest. And when prices are dropping and open interest is dropping, that means the market is strengthening. And we've already rallied over, some 65 to 15. We rallied over $50 an ounce here in just a matter of a few hours starting Sunday night. So these are interesting times, as the old Chinese curse says. So we'll watch it very, very closely. Even some of the agriculturals have held up. We've had a pretty nice run here in soybeans and soybean meal, but wheat has not had any move at all. It's been down, so a lot of difference. Cattle are still under a great deal of selling, and as are hogs, so not too much going on there. The problem that I see it, because I don't understand anything about the diseases or anything like that. All I know is that if they're going to stop trade like that, what happens is these companies that have employees, if they're not selling things, the first thing it's going to go is they're going to start cutting back employees. When you start cutting back employees, people are not eating, and then that's where the whole thing starts. So the main thing, folks, all you have to do is write four numbers down, okay? 2840 in the S&P 500. If we go below that, after all the things that have happened, that means that something really, 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 really bad is coming. Something really, really bad is coming, but I don't think it's going to happen for a few days. I mean, I would love to see a beautiful, quiet. It was nothing quiet anymore, but a nice 3-day rally up to about 3,100, 3090 to 3,100 in the S&P. That would make me very, very happy as far as being ready to put on some shorts. If we take a look here, here's an example of some of the things that occurred here. I'm going to show you the FANG stocks because I don't want to go through all the others, but I'll do the FANG stocks and just to show you these. This is the Google, folks. Look at what Google, where it stopped. I mean, it stopped. This was Friday, and we were trading with an hour to go. We were trading at 1275, and we closed at 1339. That was a 61% retracement. And look at the old highs. I mean, my goodness, it just lined up perfectly. Something happened. I don't know who was in there doing it, but this was big money. I mean, and everything. Here's another one. Let's just get this one up here. This happens to be Amazon. And you take a look at Amazon. It stopped exactly at the 78% retracement of the September low to the tick. Now, what someone said to me when the market rallied, I wasn't there at the close on Friday, and the market rallied 1,000 points. And so they said, oh, that's the options pricer. So I said, well, if that's the options pricer, that means that these Dow stocks and these S&P stocks and these NASDAQ stocks didn't move. So I went in and I checked all of them to see what happened, and they were all moving. So that was across the board, big time buying on Friday on the close with a big increase in open interest in the S&P. That ought to put some flags up. You know what I mean? So we'll see whether that means anything or not. Let's take a couple look here at a few other of these, and then we'll move on here. Here happens to be Facebook, which looks exactly like the Amazon. You see it stopped. It went a tiny bit below the 78% level, but still rallied $11. And then, of course, I think the one that really is the most amazing. That's that one. Hold on, we got that. Let's get this one. I want to show you Apple. Here's the one that's really. This is a long-term daily chart on Apple, and look at this, folks. We went to the 382 retracement. We went $2 below it. That's down $71 from the high, and that is exactly at the 382 retracement for the low we made in January. So this is why these things are so very, very important, because these numbers, even though they don't work all the time, they work a lot of the time, and that's another one. Now, here's Softy. Here's a company that pays a fabulous dividend. Look at this. It trades exactly at the 382 retracement of the low in January, and also at a 50% retracement of the low from June. I mean, right at the money, and rallies $10 on the close. Folks, this is not bearish type action. You know how much money it takes for somebody to do that? I mean, this is serious. This is serious stuff. Okay, and here's Softy again. Look at it here. Look at it just from a different perspective here on the monthly chart, just so you'll be able to see what I'm talking about. Look at that. It stopped exactly at the 382 from 2018. So anything below those numbers, folks, anything below those numbers should be interpreted as super, super, super bearish. The reason why is the people that put that money up were big-time players. I don't know if it was the Federal Reserve or the two O'Briens finally opening their purse a little bit. I don't know what's causing it, but the fact that all of those numbers on all of these indices and many of the futures and even the currencies had huge moves. And look at the Japanese yen, one that we've been very, very bullish on here. I'll just bring this up and we'll talk about it when we get back from the break. 877-927-6648. I thought you'd like that, Tommy.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ADCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the Japanese yen. You can see that spike, that volume spike on the foreign exchange markets. That was coming in at exactly a 61% retracement. If you take a look at this, you'll see this on the daily chart. You'll be able to see it very easily. You'll see the bottom down there that we were talking about there at 89.40. We rallied 4 handles up to 93.40. That was the exact 61% retracement last night. And from that level, folks, you're not going to, if you like some of these things as far as numbers and stuff, just look at this. Look at the symmetry here in the Japanese yen. You can't make this stuff up. This is a 15-minute chart. An hourly chart on the Japanese yen over the past several weeks. Look at the 382 retracement that we had there on February the 26th. Last night, after we dropped 100 pips, came right down to the 38% retracement of the low that we made back on the 27th. We rallied up to 93. We're trading around 92.87 right about now. So this is still a very, very bullish picture, and it's giving some, great trading opportunities. But you've got to look at them, a little closer than, a daily chart, because the swings on the dailies, they'll scare the bejeebies out of you. Look what happened to the, I think the easiest one to look at, of course, here would be the Dow Jones here. This is just the Dow Jones on a 4-minute chart, because it was moving so fast last night that I just wanted to I want to be able to show you that this was the Dow Jones. Now, remember, you see where we closed on Friday, that huge gap down here? That was the gap down last night when we dropped around 400 points on the opening. And then from that level, if you figured the low there on February was the A leg, the B leg was the high Friday night, the C leg was the low that we made intraday. That made a perfect ABCD up there at the top there. This morning at 3:30 in the morning, you can see I drew a little black line in there. You can see the 3 drive to a top pattern, very, very clearly. And then look at the swing down. Look where it stopped. Exactly at the 78% level. So if we start going below 25,000 in the Dow Jones E-mini, that tells you that this market's breaking, and then you've got to be careful. The amount of money that the people spent to move the market up on Friday was a lot of money, folks. I'm not kidding you. And I was joking. I don't think the O'Briens did that, but that you never know. Who knows? Anyway, let's just move on to one other thing that I wanted to keep in mind with you. Someone's asked a question, do I always look at 4-minute charts? No, I don't ordinarily, but with the market was jumping around so much that I wanted to see the symmetry that was out there, to see if there was anything out there that would tell us that, yes, we're going to melt down. And the key to me is the bond market, because the bond market is 6 times bigger or more than the stock market. So if that can hold, that's it. And remember, there's a big news announcement this week. The Federal Reserve boys, all of them, of the G7, you're talking the big boys, they're getting together and they're going to plan some stuff. So there's the ultimate plunge protection team out there right now. So pay attention to what these guys are doing. And what's really important is, if they come out and really, really, unload their purses and stuff, and it doesn't work, there's where the problem will lie. And you'll see it. It'll just start melting down for no reason at all. And I don't believe that this coronavirus, it's the excuse. It's not the reason. The reason, I believe, is the amount of debt that's out there, and the fact that that big super cycle that Elliott Wave's been looking at might have topped back there on February 10th. So we will know whether that's going to be the, we'll see whether that happens or not. All I know is this is the worst drop we've had in 10 days, and that's a pretty serious thing to look at. That's for sure. Okay, let me see what we have here. Wow, that's a pretty big. Well, I've got so many charts to show you, I don't know which ones to start off with. Oh, here's one I wanted to mention to you. Here's the one on the negative interest rates across the world. Let's get this up. Oh, I've got to cover the U.S. dollar too. Very, very. Hold on here. Be able to see. You'll see this is the ones in the pink there. Those are the ones that have negative interest rates. You can see Switzerland, Germany, all the way down to Italy, and then they're starting to, the United States, Australia, the UK, Canada, and New Zealand all still have positive interest rates. But this thing is, be able to see it's going to be. That's it. Anyway, the very important low that we made on your old 1565, the silver, same thing. Right at the 618. When you see those numbers exactly 786 on platinum, those are very important, because when they fail, that tells you that the cycle is no longer good, and that's what you've got to try to remember. You're watching some of these things. Now, in the foreign markets last night, with the German DAX. The German DAX did make a lower low from Friday. Now, we didn't do that in any of our indices. We only got down to the 78% retracements, but the German DAX was able to do it. The FTSE did not break it either. The FTSE, I don't think I have the FTSE chart here. No, I don't, but yes, I do. Hold on. See, you'll notice here that the FTSE chart also did not break down. So these, there's a giant, there's a war going on, folks. That's basically it. I posted what the projection is supposed to be there, and we'll see if the market is continuing higher after 11 o'clock, 10:30, 11 o'clock, that means that we could probably be up the rest of the day. But if we're topping around 10:30, be careful, because these markets are in bear markets. You know, we're not in bull market territory anymore, folks. And I think anybody that looks at a chart and sees the depth of that drop should pay attention. But the fact that we hit every single major Fibonacci index and all the indices and all the FANG stocks, you got to respect that. And you don't respect it if we make new lows, because we get below 28.40, it won't make any difference at all. And believe me, do you remember when I showed you those charts of just a little while? Let's just do it again, because it's really quite important, because what happened after these times is what was interesting. This is that chart that was sent to us by Rich Anderson, showing going back 90 years. But you notice that each one of these things was at a very, very good buying opportunity. Look at Black Monday, October 19th, the best. It made a slightly lower low on the 20th. That was the best buying opportunity of the 1980s. Look at the dot-com bubble. You know, that was 2001, 2002. The financial crisis, March 2009, March 5th, 2009. So, and here we are, you know, we're down 13%. The difference is, this one came down very, very fast. And I know it's related to the fear, and we don't know what's going on. And the news coming out of these places is just so ridiculous that it's just, but there, you know, we have a problem. You can see it spreading right now. We heard a very important epidemiologist mentioned that it only takes about 30 or 40 people to infect the whole country. And if they had something like the March Madness, where all these people are going to be going to all these basketball games coming up here this month, that could be it right there. So we'll have to watch it very closely. If I was going to go to one of those games, I'd certainly want to wash my hands and wear a mask. Well, let's take a break here. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. And in the last 4 minutes, the Dow Jones dropped almost 400 points. It's already rallied back 150 of that. Let's take a look at this chart that we got from Rich Anderson. It shows the different pandemics and stuff that we've had over the history since 1970, going over the last 50 years. You can see the HIV/AIDS thing, 1981, the pneumonic plague that was in September 94. Look at SARS. That was the bottom of the market in 2003. The swine flu, 2009. The cholera breakout, measles, Ebola, all of these things. The market just shakes it off. So, we are living interesting times, but this is not going to be the end of the world, folks. I really don't believe that it is. They will get this thing under control. Now, we already know that it's in Morocco, so that means it's in North Africa. And one of the things that the World Health Organization worried about was it getting into Africa because they can't contain and they can't treat. So it's already there. So we'll be able to see that very, very closely. All I know is that something really big happened Friday. That's the bottom line of what I'm looking at. And I believe that the key to these markets will be probably in the bond market. I believe the people that have been buying this as a flight to quality are going to be rudely awakened one day to realize that that is not a flight to quality. Just take a look here at our federal debt here held by the public, folks. This is not a good thing. We're at 175% of where we were in 2008. I mean, give me a break. I mean, a lot of debt out there, and usually it doesn't end bad. The good part about the debt is if you borrowed money from somebody and you can't pay them back, you're no longer a debtor, you're a partner. So that's probably going to be the case with some of these things. We'll be able to see whether this happens or not. So let's move on. But one thing you want to do is to just use some safety stuff and also have some food put away. Also have some cash put away, folks, because if they turn off the electricity at these stores, they have electronic credit cards and stuff. Have some cash so you can pay for food and stuff, because we've seen what's happened in Hong Kong and Italy and other places where things are getting a little tough to find. But you should have the basics. Have some cooking oil handy, have Clorox handy, have peanut butter handy. You can live on peanut butter forever, and have some pasta and stuff. We'll see. I think, Marshall, yes, I do believe that bonds are going to have a move down like gold. I believe that because the open interest is not telling us that the bonds are in a panic here, because folks, these contracts at the Chicago Mercantile Exchange, I'm talking about notes and bonds together, the open interest has been dropping. That means no new buyers are coming in. So what's causing it to go up is short covering. We saw that way back a year or so ago when that was happening. So pay attention to it. Maybe it doesn't mean anything this time, but that's what it looks like. So we'll see if that's going to be the case. And also remember that the Federal Reserve banks, we're talking about the G7 guys, they're probably meeting Wednesday or Thursday to discuss how they keep this thing from melting down. all I know is if we get below 28.40, they're not going to be able to do anything. So that's because the people that did this buying on Friday they're the ones that you got to pay, whoever they are. And somebody took a lot of chutzpah to do that. We got Larry, we got a question from Mr. Z here. The big decline in gold price Friday, does that mean that that bounces fail for a time? No, I think it's just a major low. The reason why I say that, Z, is we've been waiting for that price on silver at 1640, and we went there. And we rallied, 60 cents from that level, which is a pretty good amount. Of course, if we go below that, that tells you that you're in a big deflationary cycle. All of those numbers were hit. So platinum, silver, gold, right spot on. So I would be really be apparent to that, because we get below those, that's what we're going to be looking at. So we'll be able to see what's happening. Yeah, we're having wild swings, 300-400 points in the Dow is nothing anymore. Remember, we used to get 100 points in the Dow, you had to squeeze it out. Now with all the fear that's out there, it jumps around, quite a bit. Keep an eye on the big price, the big price stocks. Apple, if it gets down on the day, that's going to be, you'll be able to see it. You'll be able to see it. But and we're starting to have a pretty good move in soybeans and meal rallied quite a bit. So we'll see whether that's going to be the case or not. So we're going to find out how it's going to work out. So that's the main thing, is what happened on the coffee's holding up relatively good. There's a few of them that are doing the sugar. They beat the heck out of sugar. Remember that topped at 16. Now it's trading at 14. We talked about that quite a bit. But those are just normal charts. The cattle are still getting beat up pretty badly. They're down from 107 down from that 125 level. But it'll all work out. We're still going to make it through. The one thing is we do live in a great country with a lot of good positive things, even though you don't see them in the news anymore. But those are the things that you want to keep a close eye on. That's the main thing. Watch the time frame at 10:30 today, folks. That's when the fat lady's got the orchestra playing, and we're going to find out what's going to happen with some of these. And it's 10:30 in almost everything. It's 10:30 in gold. It's 10:30 in stocks. It's 10:45 in crude oil. So watch those numbers, because if we start moving up after that time, it's got a really good chance to move pretty good. Now, I do want to talk about the U.S. dollar here for a second, because that's a big factor in what's going on here with everything. And we'll get this up here. You'll be able to see here. Remember when we were looking at the U.S. dollar, this is when the euro was down there at that 107 and change. Now it's at 111. It's moved 4 handles. You'll see what's happened to the U.S. dollar. We've come down, and now we're testing where we were back in February. Slightly lower than this, folks. This is going to be a potential that the U.S. dollar could weaken substantially. And if that happens, that's going to be a big, big surprise. So watch that. Those are the main ones that we're, keeping a very, very close eye on. But the key from watching these markets just operating, because the bonds are such a larger market than the stock market, trades a lot slower. Well, sometimes it does. Last night it was moving $6,000 up and down. Do you realize how much that is, folks? That's 6 handles in bonds. 2 up, 3 down, 2 up. I mean, that's 8 handles. I mean, that's a lot of movement. There's really a battle going on over there. And with open interest dropping, it tells you that it usually tells you that the buyers are leaving the market. So the only thing that's covering this is short covering. And when that's over, be real careful. So those are the things that we're paying very close attention to as we look at these things today. But review the 24/7 newsletter, folks. All of those fib numbers are there. All of the distribution is exactly right, Marshall. And look at the currencies. I mean, there are just so many numbers. I just can't remember how many times I've seen this many fib numbers coming together. And what's important, because if they fail, then that's when you really have the problem, and you got to say, we are going down. So remember what they said, vaya con Dios means goodbye in Spanish, but going below 2850 in the S&P is goodbye in any language. So we'll be right back after we take a break. Remember, we're going to have, I don't talk about crashes. The last bond market crash, I don't even know if we ever had a bond market crash or not. We've had some big corrections, but we've never really had a crash. A crash is when you drop 10% or so really quickly. But we got Bill Bill Chapman coming in on Wednesday, Stan Harley and Rich Anderson tomorrow, and Bill Meridian from Cycles Research on Thursday. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, posted a chart of the New York Stock Exchange Index weekly chart, and you can see that Friday's low was exact 61% out to the third decimal point. That means the players that were there Friday made their bet, and that's it. And if they go below that level, that means they're in big trouble, and that means the rest of the market is going to go down a great deal. You notice the low in November, December of last year was exactly 61% retracement. This year is actually a little bit more accurate. This first one was to the second decimal place. This was to the third decimal place, so it's very, very important. Watch the main stocks, Apple, Google. Oh, one other one that looks really interesting. I don't know what it's doing today, but I wanted to bring it to your attention because we've talked about this before. Someone tell me what Netflix is doing, because look at this, folks. Look at Netflix. We made a little bit lower low than we did on Tuesday, and it closed quite a bit higher. But look how strong this stock is. Look what happened over here on the left. You see there in January, the Dow was down over 600, and Netflix was up on that day, and you see how it gapped up? We were down 2,000 points in the Dow Jones, and the Netflix never even moved. So I don't know what Netflix is doing right now, but if there's ever a bullish stock, that would be it. Now, if it starts to give up, that would be a little bit differently. So it's trading at what you say 371, and where did we close? 369. So it's up a little bit. So this is telling you we'll see what's going to look. So. Okay, if you can't leave the house, watch Netflix. That's why it's bullish. Very good, Tucker. I never thought that. They're not even watching TV over in Hong Kong anymore. They don't trust anything as far as the news items. Folks, the key times is the next hour. Watch the next hour. Watch Tiger TV. That's good. You got that right, Tommy. And we'll see you guys on the flip side tomorrow. We'll have Stan Harley, Rich Anderson, and Rich will tell us about his travels to Las Vegas and what he saw there. And we'll have Stan chat with us, and then we'll have Bill Meridian on Thursday and Bill Chapman on Wednesday. So keep the fires burning, live every day in an attitude of gratitude, and may God bless.